So here we're going to go real quickly through what is an option, my usual driving the car analogy. This should all make sense to you. If it doesn't, as I mentioned before, I highly recommend you take my Option Trading for Rookies Understand Options Completely course. But hopefully, if you have a general understanding, that's just kind of a quick refresher. Again, we start with stock. Stock equals shares, which means we're buying shares in a company. An option is a leveraged instrument, which means it controls or equals 100 shares of stock. There are two kinds of options, calls and puts. We're learning how to do covered calls here, so all we care about is the call side. So we buy a call if we believe the stock is going up, and we sell a call if we believe the stock is going down. And that's the extent of the knowledge we need to have in this case. Continue with option basics. You should also know that options expire on the third Friday of the month in which your option is in. So I know these are kind of old calendars, but let's just say you owned a December 2013 option. When would it expire? 1, 2, 3. It would expire on the 20th, which is the third Friday in December. In January, when would it expire? If you owned an option in January, it would expire on the 17th, which is the third Friday in January. Also, stock only has one price. When we buy stock, at the time we buy it, it's got one price. Boom, that's the stock price. Options have what are called multiple strike prices. So you should be aware of what strike prices are, because that's going to be important in the selling of calls when we do the covered call scenario. And finally, these are our rules for doing a covered call. Now I'm putting them here before you understand what they mean, because I just want you to learn them in parrot fashion. When you decide to do a covered call, these are the rules you're going to need to know. We'll explain them so you understand them more later. So what is a covered call? Well, a covered call can only be done if you own 100 shares of stock. So if we're doing multiple covered calls, that should mean to you, if we want to do more than one covered call, we have to have multiples of 100 shares of stock. So if we do a covered call with 200 shares of stock, 300 shares of stock, all doable. 150 shares of stock, we can't do the correct covered call. We can only do it on blocks of 100. So if you own 100 shares already, great. If you don't, if you want to do covered calls, you're going to buy shares in blocks of 100 to do a covered call scenario. So that's the buying the shares part, blocks of 100. How about the calls? Well, our rule is we sell calls with a strike price above the current stock price, always. Sell a call strike with above the current stock price. And finally, we sell a call as close to 1 month away as possible. So those are our rules. I want you to learn them parrot fashion. As I mentioned, we will explain them in more detail as we go further. So when you're looking to do covered calls, what are you going to do? You're going to buy in blocks of 100 shares. You're going to sell a call strike above the current stock price, and you're going to sell that call as close to 1 month away as possible. That's the simple, easy rules, the driving the car scenario for doing covered calls.